What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about the setup and setups that took me from $1,000 to $9,000 two times. So I've done that two times in the past 6 weeks. What I did was I took $1,000 from my account and I created a new account, made $1,000, and took that to $8,700. Then I did it again and took $1,000, and I was like, okay, was that a fluke, or can I do it in any market? So I did it again, 1,000, this time to 7,800. And I wanted to kind of break down what did I do to get to those numbers. When I'm dealing with these really small numbers, it's pretty easy to start moving up. But once you start dealing with larger numbers, the psychology starts to kick in. So usually the breakdown is not as smooth, but it's pretty easy for me to do it when I'm dealing with smaller numbers, because then I'm able to focus on the setup. So what kind of setups am I looking for? I want to kind of show you guys exactly the setups to look for. Okay. So the first thing we need to understand is, and I talk about this in all the videos, we need to know what a trend bar is and a non-trend. So this is a trend bar. We have another trend bar here, another trend bar here. And those are red trend bars. These are green trend bars. So we need to know what a trend bar is and a non-trend bar. Now, what are some non-trend bars? So these are non-trend bars here, here. Okay, so we have trend, trend bars, and then we have non-trend. Non-trend and non-trend. So these tiny little bars. Let me zoom in so you can see this. So non-trend, non-trend, and then we have these big bars, trend bars. So what do I mean by that? So trend bars are bars that are big and they contribute to the direction of the trend. On this left side, we have a downtrend. And on this right side, we have an uptrend. The big green bars contribute to the upward push in this trend. The big red bars contribute to the downward push in this trend. These little tiny bars just cause price to go sideways. We do not get in after these little tiny bars. We're looking for big pushes down. Okay, we're looking for pretty big pushes down. Now, what I look for is I look for big pushes down, but I also look for key levels to be broken. I also look for crossovers. Okay, what kind of crossover am I looking for? EMAs. So EMA crossovers typically signify market structure shifts. So we just came from going up, up, up. And then on this day, this is Wednesday, we start going down. This looks like a pretty good trend bar as well. There's just a huge bottom side wick though. But it's still a pretty good trend bar. What's happening here? So this pink line is my 9 MA. The yellow line is the 20 MA. One of my favorite plays is when the 9 crosses below the 20 or above the 20. We'll see in a second, but below the 20 means we're probably going to go down. So the play that I like to take is when the 9 crosses the 20, I'm going to get in. And the way you enter trades, you could look at my videos on how to enter trades, but after the bar forms, you would get in immediately on the next bar. So it's called just getting in one tick below the entry bar. So this would be my entry bar. It's a nice trend bar. Entry bar, or signal bar, signal bar. This is my signal bar because it's telling me to get in. Once it forms, I get in on the next bar. Okay. So I'll get in here. So the 9 just crossed the 20. So we should have a good downward push. And we do. We start going down, down, down. And this is the trade that I've been taking. And it's yielding it's a really good sign of a switch from upward movement to downward movement, a market structure shift. Okay. So when the 9 crosses below the 20, good play. So I've been taking those plays and I've been doing 0 DTE options. And yeah, 0 DTE options are risky, but you only want to take 0 DTE options when there is opportunity. When there's opportunity. What does opportunity look like? Well, it looks like, okay, well, we have these big pushes down and then we get a 920 crossover. We know that we're switching from going up to going down. Okay. Where am I going to set my stop? So my signal bar is this bar here. I'm going to get in one tick after. I'm going to set my stop to one tick above this bar. If we go back above this bar, and this play is trash, then it's going the other way, okay? But usually 99% of the time, it does not go back the other way. So I've been getting 0 DTE options, and I've been playing QQQ. QQQ has a very nice average daily range, which means that on the daily day-to-day basis, it's moving a lot of dollars in the upward and downward direction, which gives you a lot of opportunity to make money. Okay, and the name of the game when it comes to options, I'm telling you right now, it's opportunity. It's not about, oh, let me just get in. Oh, it's 9:30. Let me get in. Like, a lot of you guys are. I see why you're struggling. It's literally just wait for opportunity. What does that look like? Oh, 920 crossover. That's really good. Oh, big push to the downside. Let's get in right after and enter on a good push. Okay. Oh, we get to support. Let's wait for a bullish engulfing push to the upside, confirmation, crossover, move up, okay? Anyways, we've been doing that. And then also, the 920 crossover works to the upside. The pink line crossing above the yellow line here with a nice push. We can enter one tick after that bar. Where am I going to set my stop? This is my signal bar. I'm going to set my stop one tick below. And we never hit that. We just have a nice continuation to the upside. So essentially, I'm just waiting for a good bull bar or a good bear bar, so good trend bars. And I like to wait for a 920 crossover for additional confirmation. Something else that I look at too, I look at the volume RSI. So the volume RSI above 50 shows that you have good long opportunities. And when it goes below 50, as you can see here, when I entered the first trade, below 50, when it goes below 50, that's a good short opportunity. So I'm looking for 3 to 4 signs of confluence to the downside, 3 to 4 signs of confluence to the upside. Okay, so I need a lot of evidence showing me that, okay, this is going to go down right here, and this is going to go up right here. And timing is everything, really. And the best timing when it comes to trading that I've been seeing is when that 9 crosses that 20, it's telling you this is a perfect time to get in for an immediate, massive, momentous move. Okay, and that's where I've been getting these big gains. They're like 80%, 50%, 100%. And I'm not putting in a lot of money, man. Like I'm putting in $500. It goes 100%. Well, I just made $500 in 10 minutes. And then I put in $1,200. It goes 80%. Well, I'm making $880 in 5 minutes. So, and I'm like, okay, once I hit that, I'm done for the day. I'm not one of those people who's trying to put in 100K and make 30K today. Like, I'm not doing that. I don't care about. I don't need money that bad. I don't need money that bad. So, what I'm just trying to do is be consistent and use very little risk. Like if I put in $500, that means that the maximum I can lose trading options is $500. But my gain is exponential. And again, if I do the same thing the next day, I wait for a 920 crossover, a nice bull bar push to the upside. Again, I can enter on a 920 crossover, nice. Or over here on the left-hand side, the 9 crosses below the 20. Get in one tick after this bear bar, nice, move down. And it kind of just repeats itself. Something else I look for is for lows to get taken out. Double top neckline breaks. So I might be going over this a little bit fast, just rewind if you need to, but when we put in a double tops, a lot of people don't know how to play double tops. They like see, oh, it's a double top. Should I get in? You can prematurely get in, but sometimes it turns out to be a break to the upside. There's not really a good guaranteed way to tell, like, oh, is it a liquidity sweep or is it just a double top? Like, there's not a good way to tell. And people will be like, oh, this is the way. No, you don't know because you're not big money. So stop lying. Stop capping. You're trying to get people in your Discord. But if you do get a double top, double tops create what's called necklines. So after the first move up, we get a pullback. That pullback creates a neckline. Okay? Neckline. So this neckline is where these bars are closing. Not the wicks, but just where the bars close. Okay? Then after that retracement or that pullback, we then come back up to highs, create a double top. Okay, if we don't go past that previous high, it's a double top. Now we start to sell off. If we break below this neckline, then it's a very good play short. So you can go short we break below that neckline, it's going to be a good opportunity to go short, to get puts or to short the stock. Okay, the stock is coming down. But if we come to this neckline, we don't break below, we bounce back up, then it'll fly. But if we break below, then it'll break. And two signs that this is going to come down is, number one, we had a break below the neckline. Number two, the 920 crossover. And then number three, it looks like the volume RSI was breaking below 50. So all those signs show me that this stock is going to be coming down. Okay, this is absolute straight gas. So if you need to, please rewind the video and take a look at those things. So 920 crossovers, MA's crossing over, nice trend bars. So remember, trend bars, big bars, so big red bars or big green bars. In this case, this is a downtrend, big red bars, 920 crossover. The volume RSI is coming down. We broke the neckline. All those showing that we're coming down. And then here we put in a bottom support, bullish engulfing bar here. Nice move back to the upside. We get our 920 crossover again to the upside, and we rip back to the upside. So at the end of the day, the name of the game is waiting for opportunity. It's not like, oh, let me just get in because it's 9:30. Like I need a trade. Wait for this stuff to happen. Wait for market structure shifts. Wait for 920 crossovers, or if you have a different MA you look at, look at the crossovers. They tell you a lot. Look at your momentum indicator, your oscillators like RSIs, MACDs, and just start to collect evidence showing you that one thing is going to happen over the other, and really go back and look at your charts and see where is the best opportunity to get into some of these trades, because there are places where the play will be a layup, and then there's other places where it's going to be a 3-pointer. It's harder to judge the trade. And if it's really hard to judge the trade, do not take the trade on, or reduce your size so much that if you do lose, it's going to be a small loss. But when it's a easy play, like layup, like kind of like those, like, oh, it's a crossover, load the boat, put a lot of money in, and watch it go, because you need outsized gains to put you ahead in trading. Okay, so hopefully this helps somebody out there. But this is literally how I took my $1,000 account to 8,000, and then 1,000 again to 7,800. Okay, and I think I'm going to do another $1,000 account challenge, and then I'm going to just document it, because I want to put it on like YouTube, because a lot of people are like starting with like $400 or 500 or $1,000, and they're like, oh, it's not possible to trade. You just don't know how to trade, and you don't know what contracts and options to look at. Okay, so there's a difference, and you're probably not practicing anyways. You're probably just dabbling in trading, looking for money. So anyways, like, share, subscribe, do all that good stuff. If this, I promise you this is going to help you out, but if it did help you out, drop a comment, let me know. I'll see you next time. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,